It's open enrollment season, and I know what you're thinking. Ugh, paperwork. All of these emails from HR. I'll just hit enroll on the same old choices. But I want you to stop right there. This isn't just about choosing a medical plan. This is your chance to use your employee benefits to buy yourself peace of mind and unlock thousands in hidden savings. So get excited. After over a decade in corporate America and the oldest sister here at Sisters Forfi, I am telling you, don't leave free money on the table. Open enrollment is your annual chance to set yourself up and your family so there's less surprises and more savings next year. Especially with how unpredictable 2025 has been, it's time to plan ahead. Thank you so much for joining me here today at Sisters for Financial Independence. My name is Catherine Agupjan, and here at Sisters for Fi, we help you get savvier with your money so that you have more to live, save, and give. In this video, we're going to talk about how to make smart moves during open enrollment, not just to get the basics covered, but to maximize the benefits you already have access to. Let's start with your health insurance. I know it's tempting to pick the cheapest plan, especially if you barely used your benefits last year. But ask yourself, what does peace of mind look like for next year? If your body has been telling you to finally schedule those doctor visits, or if you've got little ones or one on the way, it might be time to upgrade your health plan. This is all about future thinking. Yes, it'll cost a bit more per paycheck, but it could save you thousands later as well as save you a lot of headache. Choosing a plan with a slightly higher premium usually has a lower deductible, a lower out-of-pocket maximum, and better co-insurance rates. You pay a little more from your paycheck now to avoid a huge medical bill later. And this is the definition of financial stress reduction. Here's a tip. Once you know what health plan you're choosing and the amount of your deductible, start saving money in a separate savings account up to your deductible. That way you already have that money covered and it's earmarked for all of your health expenses. If you are planning a pregnancy in 2026 or going to give birth next year, you must look at your coverage. A simple normal labor and delivery can still cost you thousands in the US. When I had my child, my pregnancy went smoothly until my newborn had jaundice and had to be hospitalized for a few days. That stay cost around $25,000. Because we had a robust health plan, our total out-of-pocket cost was minimal. So switching health plans during open enrollment to cover pregnancy, labor, and postpartum care is a non-negotiable step towards avoiding medical debt. That experience taught me that health insurance isn't just about checking a box, it's protection from the just in case. And when you have good health insurance, it gives you the space to make better decisions without those medical bills looming over you. Now, think ahead for 2026. Are you considering starting a family? Are you planning a major surgery? Or maybe your doctor finally convinced you to get those preventative care. This is a time to start thinking about that. So if you anticipate high medical cost or you will be using your health plan frequently next year, now is a time to check the math and upgrade your coverage if it makes sense. Next up is the 401k company match. This is literally free money being added to your retirement savings. And if you're not taking full advantage, you are under optimizing your compensation package. If your employer matches your 401k contributions, please do not leave that money on the table. Every dollar you contribute that gets matched is basically doubling your money instantly. So your big action item for this benefit is to find out your company's maximum matching contribution limit and ensure your 401k retirement contributions meet it. Yes, this money is tied up for retirement, but you will retire someday. Don't let your employer keep money that is rightfully part of your pay. This is the simplest way to double your retirement money and accelerate your path to financial independence. Now, even with rising costs, this is one benefit that pays you back later in real dollars. Make sure you are logging on to your retirement accounts. Make sure you have set the deductions properly so you can maximize those matches. While people say this is free money, this is part of your total compensation package. So take advantage of it. Your future self will thank you for it. There is a hidden gem somewhere in your employee benefits guide, and you might have to look for it. And that is the tuition or training reimbursement from your employer. Your company might pay for certifications, classes, or even a degree, and most people never use it. I know many of us are happy in our roles, but times are changing. So if you look at your tuition reimbursement program, this is actually a career cheat code that you need to take advantage of. Your employer might pay for you to gain valuable skills that make you more valuable both to them and to other potential employers. Completing a niche certification, a professional development course, or even pursuing a company-paid master's degree can directly lead to a salary increase or promotion eligibility. It's also a nice added bonus to your resume. Adding a recent training program completion or a new certification to your LinkedIn profile and resume shows you are a lifelong learner and a go-getter, a trait that every hiring manager loves. When I first got out of college, at my first corporate job, my company paid for my master's degree. That one decision boosted my salary and opened new opportunities and cost me zero debt. So if you've been thinking about upskilling, especially as we move into the age of AI, 2026 might be your year to do it on your company's dime. Save yourself money. Don't go into debt if you can help it. Have your company help you pay for gaining new skills. You know, reading about your employee benefits guide doesn't seem so exciting, but if you want to save money, then you need to be reviewing your benefits to see which one you can maximize. If this video has been helpful so far, give it a like and share it with a friend. If you are partnered up, you and your partner need to compare and look at both of your benefits so that you can maximize it together. Doing so can ensure you have a 2026 that has more money, less stress, and allows you to take advantage of your total compensation package. And if you want more money content like this, do not forget to subscribe to Sisters for Fi, where I release a new video every week. Next, let's talk about a major hack for reducing your taxable income. That's the Health Flexible Spending Account, or FSA, or the Dependent Care Flexible Account. If your company offers it, this is a must-use for saving money on common health expenses and common family care expenses. The Health FSA is a use it or lose it account, so you do need to plan, but the savings are huge because the money you contribute is pre-tax. That means you don't pay federal or state income tax on it. And for FSA, you can use that money for FSA eligible products like copays, deductibles, over-the-counter medication, and even menstrual products, all tax-free. So if you are thinking about 2026, planning for a baby, braces, or even LASIK, this is the year to fund that account strategically. You do have to sign up for it during enrollment period. Now, let me give you an example of how I used FSA in the past. So years ago, I saved up money in my healthcare FSA to pay for my LASIK eye surgery. It was like getting a discount because I paid for a major elective procedure with money that was never taxed. The health FSA is a crucial tool for managing out-of-pocket health costs. So think about this year. What have you paid for as far as copays or deductibles? What have you paid for at CVS? All of those items could be paid for from your FSA, which is money that has never been taxed. The next FSA you want to look at, especially if you have kids, is a dependent care FSA. If you're a parent or a caregiver, the dependent care flexible spending account is another secret weapon for tax reduction. It works like the health FSA, but the funds are specifically for child care expenses for a child under 13 or care for a dependent in your home. For working parents who pay for daycare, after-school programs, or even camps, or even a nanny, using the dependent care FSA is essentially a way to cover those high costs with pre-tax dollars, lowering your taxable income while covering real life expenses. So if you are expecting a child next year, you need to budget and enroll now to lock in that tax savings. Last but not least, we have to talk about protecting your income and the people who rely on you. This is the true definition of financial security. So within your benefits guide, you'll see a section for insurance, more specifically life insurance. And life insurance is for the people you leave behind. If you have dependents like a partner, a child or children or elderly parents who rely on your income, you must have coverage. The group rates offered through your employer are usually very affordable and offer a great baseline level of protection, which means you can secure your family's financial future should something happen to you. The small premium you'll have to pay that's getting deducted from your paycheck will offer you so much peace of mind. Another benefit that you should look into is short-term disability. If you're young and healthy, you might skip this, but I wouldn't recommend it. Short-term disability insurance covers a portion of your income if you become unable to work for a period of time, whether that's a serious accident, surgery, or childbirth recovery. You need to replace your income when you are not working. And it basically protects your paycheck. So having short-term disability ensures your essential expenses are covered while you are recovering. You don't want to burn through your emergency fund just because of a broken leg or an unexpected illness. I'll tell you a quick story of our own mother who a few years ago was diagnosed with breast cancer. Her robust health plan thankfully covered the treatments, and her short-term disability kicked in to provide a paycheck while she recovered. That's what peace of mind looks like. It's not having to worry about money when you are fighting for your health. You want to focus your energy on getting better. Both group life insurance as well as short-term disability insurance can make a real difference when something unexpected happens. So don't forget to enroll in these benefits if you have people relying on you. Remember this, your benefits are part of your total compensation package. Don't let those dollars go to waste. Every benefit you take advantage of is a step towards maximizing your wealth and securing your future. In this video, we covered some of the baseline benefits, but your company could have other unique benefits that you need to look out for. For example, I have worked for companies that covered gym and wellness reimbursement, cell phone reimbursement. There was one company that covered our city bike membership for a year. I worked for another company that offered on-site dry cleaning and banking services, and of course, the holy grail of extended parental leave. So take this time to review, upgrade, and ask questions. You've earned these benefits. Now let them work for you. I highly encourage you attend your HR open enrollment sessions and read your benefits guide front to back. There is no such thing as a bad question when it comes to securing your financial future. If this video helped you, give it a thumbs up and subscribe to Sisters for Fi for more money lessons to help you live a life of impact today and tomorrow. If you are a parent and you want to know specifically what benefits you should be taking advantage of for you and your family, this video is going to be for you. And if one of your goals for 2026 is to finally get out of credit card debt, this whole playlist is going to be for you. Thank you so much for tuning in, and I will see you in the next video. Bye!